A diamond is forever. I'm sure we all have heard this tagline, isn't it? This tagline from De Beers, which is the world's largest diamond company, has made diamond a symbol of love and commitment. So this campaign was launched in 1960s, and after the campaign, the demand for diamonds skyrocketed globally. For instance, in US, diamond rings were not that popular in 1930s. Hardly 10% people would gift a diamond ring during engagement. But after the campaign, diamond rings were part of more than 80% of engagement in US in 1980s. So in this video, I'm going to analyze the fundamentals of one such Indian company that specializes in diamond jewelry manufacturing. It's Goldiam International. Recently, the stock came into limelight when celebrity investor Ashish Kacholia invested in the company. And not just him, the stock was already a part of portfolio of two other celebrity investors, Mukul Agrawal and Ramesh Damani. And all these three investors are known for identifying small cap and micro cap gems that have generated multi-bagger returns for them. So not just one, but three celebrity investors are buying Goldiam International. Well, that's a rare situation. The question is why? What is so special about this company? Hey everyone, my name is Sahil and this is my Personal Finance Academy. Recently, I received multiple requests to review Goldiam International after three celebrity investors Ashish Kacholia, Mukul Agrawal and Ramesh Damani invested in the company. So here I am with in-depth study about the company where we will try to understand its business model, future growth prospect, key strength and risk, financials and valuation. And then we'll take a call if you should also consider adding this stock in your portfolio or not. Alright, let's get started. Incorporated in 1986, Goldiam International started its journey as exporter of diamonds to the US. But over the last 35 years, Goldiam has transformed from being just an exporter of diamonds to exporter of diamond jewelry. And its portfolio include engagement and anniversary rings, wedding bands, bridal sets, fashion pendants, necklace and earrings. Over the years, company has shifted its export business from wholesale to retail, and that resulted in better operating margins for the company. But that was not enough. In the last few years, company has ventured into lab-grown diamonds, where it is among the few companies of the world that has the patent for the process to manufacture lab-grown diamonds. Now here, it is very important to understand what is lab-grown diamond and key difference between natural diamond and lab-grown diamond. So diamonds are certainly an aspirational product. They represent love and commitment. But there is only one problem: money. It costs a bomb to buy diamonds. But what if I tell you that there is an alternative to a diamond that looks exactly like diamond and has the same chemical and physical property like diamond but comes at a very low price? Well, I'm not talking about fake diamonds. I'm talking about lab-grown diamonds. Yes, today diamonds can be produced in a lab. So scientists are using a popular method called chemical vapor deposition or high pressure, high temperature to create diamonds in the lab that optically look like earth-mined diamonds, contain the same chemical and physical attributes, and have even received the certification from Gemology Institute of America and International Gemological Institute. In short, these lab-grown diamonds are as real as natural diamonds that are mined from the earth and have shape, size, color and clarity grades just like natural diamonds. And they are certified real diamonds. Basically, the natural diamonds are created under the pressure of Earth's crust over millions of years. Then they are mined, cut and polished. Whereas a lab-grown diamond is placed through the same circumstance only in a lab setting. In fact, the process used to create a lab-grown diamond cuts down the growth time significantly from millions of years to a couple of months. And we can't even differentiate between a natural diamond and lab-grown diamond with naked eyes. Now, since you don't have to mine the lab-grown diamonds, it is relatively much cheaper to manufacture it. And the selling price is also much cheaper than natural diamonds. How much cheaper? As low as 60%. So lab-grown diamonds have two benefits. A, it improves the operating margin of the company, and B, it costs less for the end buyer. And lab-grown diamond contribution in company's top line is increasing, which currently stands at 20%. Remaining 80% revenue still comes from natural diamonds. Now, since Goldiam International is manufacturing diamonds and creating jewelry, it is completely backward integrated, and that has improved its operating margin significantly. Not only that, over the years, Goldiam has also transformed its supply chain by creating an omni-channel platform with e-commerce website, and presence on other e-commerce platforms. So now customers can place the order online, and the shift in business model from traditional channel to digital platform has also resulted in lower working capital days. So earlier with this traditional channel, the working capital days were around 120 to 150 days, and now with digital platform, it has reduced to 10 to 30 days. All of this has resulted in improved inventory turnover, better cash management, and ultimately high operating margin and high profits for the company. Now, if you look at the financials of the company in the last 5 years, its revenues have grown from 308 crore in FY17 to 688 crore in FY22, and its margins have consistently increased from 8-9% to 13% and then to 19%. As a result, company's net profit have zoomed from 21 crore in FY17 to 106 crore in FY22. That's 5x jump in profits in 5 years. And company has been consistently profitable with very high ROE and ROCE. And best part is that it is virtually debt-free with debt to equity of 0.02. As of today, company has a net cash balance of around 150 crore. So company has a very strong financials, and strong financials with proper inventory management plays a very crucial role in jewelry segment. We have already seen value destroyers in this segment, including Gitanjali Gems, Nirav Modi, and so on. The biggest reason for downfall of these companies was because they were in heavy debt and did not manage their inventory well. But Goldiam looks like a well-managed company with zero debt and high profitability due to its consistent focus on business transformation. The reason for this transformation in Goldiam International can be attributed to the leadership of the company. So basically, Goldiam International was founded by late Mr. Manhar Bhansali and is currently managed by his son, Mr. Rashish Bhansali, who is the chairman of the company with 28 years of experience in the field of diamonds and jewelry. And now, the command of the company is in the hands of Mr. Anmol Bhansali, son of Rashish Bhansali and third generation member of the family. Now, Mr. Anmol has done his graduation from Wharton School, US and acquired certification from Gemology Institute of America in 2017 and has been involved in the business since last 6 years. So after the infusion of young blood from third generation with right education and expertise, Goldiam International has transformed its business. And this transformation has resulted in rising interest from leading investors of our country, including Ashish Kacholia, Mukul Agrawal and Ramesh Damani. So fundamentally, Goldiam International is looking strong. But the question is, how is the future growth prospect of the company? Okay, before we proceed further, I just want to mention that nearly 40% of the viewers have not subscribed to this channel yet. So if you find value in my content, do consider subscribing it. And it doesn't cost you anything. It really encourages me to continue creating well-researched content. And in case you want to learn every aspect of money management and stock fundamental analysis, I have a complete course. Do check it out. As far as future prospects are concerned, let's break it down into near-term and long-term prospect. So in the near term, Goldiam International is facing difficult times. There is a major concern due to slowdown in US due to high inflation, and Goldiam International is completely dependent upon US market. As a result, after an exceptional growth in last 5 years, company's revenue have fallen from 688 crore to 591 crore in trailing 12 months. Although its margins have improved from 19% to 22%, and the reason is due to increasing share of lab-grown diamonds. In the last few quarters, lab-grown contribution has increased due to challenges in import of natural diamond from Russia. And once the natural diamond share increases in the near term, it can negatively impact the margins. So overall, the next few quarters can still be challenging for the company. And hence, I believe that there should not be a hurry to invest in the company. Because if you look at the share price, its share price has also jumped exponentially during COVID, and then it saw 40% correction. However, recently its share price has jumped 35% within a few days to current levels of 166. In terms of market cap, currently it commands a market cap of around 1800 crore. So it's a micro cap company. Now, as far as celebrity investors are concerned, Ramesh Damani has invested in the company from a long time, as long as data is available. So has already seen a huge jump in the share price. Mukul Agrawal entered in September 21 and Ashish Kacholia has recently entered in December 22 quarter. But please note that there is no shareholding of FIs and DIs in this company. So it can be very volatile. And please don't just buy a share because a celebrity investor has invested in it. Because people like Ramesh Damani, Ashish Kacholia have a very high risk-taking appetite. Even a few hundred crores of loss would not impact their lifestyle. But can you take a hit of 30, 40, 50% in your portfolio? So please analyze your risk appetite, do a thorough analysis, and then take a call on investing in this company. I think that there's no need to hurry to buy this share. After the Q3 result, the share jump should get normalized and should give a better entry point. Although in terms of valuation, even at current levels, the valuations are looking attractive at P ratio of 18. But I don't expect the US market to improve in the near term. That would put a constant pressure on Goldiam earnings and hence on share price. But as far as long-term growth prospects are concerned, there's no doubt that Goldiam is looking fundamentally strong and there is a growing demand for lab-grown diamonds. And as the consumer gets more aware that lab-grown diamonds are also real diamonds, its adoption would increase. So the Gemological Institute of America is predicting that lab-grown diamond is expected to grow at 15 to 20%. And that's where Goldiam International can grow big. And in the future, Goldiam can even expand its market in other developed countries of Europe. And probably it can even venture into Indian market. So management has mentioned that they have recently invested around 10 crore to develop its in-house lab-grown capacity and have also recently done an acquisition. And company expect lab-grown diamond segment to contribute nearly 50% in its top line in the next 3 to 4 years. Of course, it won't be an easy ride because company is already facing a lot of competition in lab-grown diamonds. But overall, the way Goldiam International business is established with complete backward integration, it is looking very promising. Now tell me in the comments, what is your take on this stock? Have you invested in it? And also let me know if you want me to cover the business of any other company. Thanks for watching this video. I'll see you next time with more of such interesting research content.